So what can you donate? And I call the foundation a cookie monster of charitable vehicles because you can quite literally donate anything that you can get valued. And there's a lot of things that go into that. But by and large, most foundations are built off of publicly traded securities. So things like Tesla and Nvidia and Amazon and Google and Microsoft, if you have individual stocks that are highly appreciated, those are typically the most favorable to donate because they're tax advantaged in the sense that you get a fair market value deduction. You avoid the capital gains tax if you were to sell it, and you still have the asset within the foundation. And to me, the fourth benefit is you're not outlaying cash to fund the foundation. So that's why you'll see the biggest foundations are all built off of publicly traded securities. So you have cash, which is very common. You have publicly traded securities, and then the third is all other assets. And those are valued at the basis. So not as tax favorable for the contribution, but it's very favorable for avoidance of capital gains. So if somebody had a piece of property in California that they bought for 100,000 back in the 70s and now it's worth 2 million, they don't want to pay the cap gains on a 1.9 million. They would contribute the property to the foundation. Foundation sells it. It now has $2 million and can reinvest that. A donor advised fund, you can give up to 30% of your adjusted gross income in stocks. With a foundation, it's limited to 20% of your gross income. So if you made 100 grand, you could give up to 20,000 in stocks with the foundation and up to 30,000 with the donor advised fund. At the bigger levels, they actually care less in aggregate of their personal tax benefit, like because we're thinking there's multiple levels to taxation. You have your income tax, you have the avoidance of capital gains tax, and then for them, they're avoiding estate tax as well. So there's a couple things at play. I always use the example of Mark Zuckerberg donating $2 billion of Facebook stock in 2017. He got a $2 billion income tax deduction. I don't know what his personal income tax situation is. He might have sold something else and he wanted to offset that in some way. But whatever it was, he also carries forward anything additional. So if he didn't fully use that in that year, he carries forward anything in excess up to an additional 5 years. So there's that component. By donating that, he avoided $660 million of capital gains tax. Shout out to my California friends. Then on top of that, every time he's moving dollars out of his estate, he's avoiding estate tax. What I found, and this is again changes your thought process. The wealthier people I've worked with, they are less concerned about their income tax and more concerned about the other taxes that they are accustomed to. Like I said, anything you can get valued is subject to appraisals in a lot of cases. But I've seen uncut timber, livestock. Angelina Jolie had her wedding photos valued and donated to her foundations. Artwork is a huge storehouse of value. I don't get it myself personally, but yeah, value. A lot of rules around that, but definitely possible. And there's a famous case of a gentleman in California that has like $150 million estate that is completely within a private foundation. And about 100 million of it is his artwork in like a garage. And he qualifies as a 501c3 because like 2 times a year, he opens it up to a curated list, let's say, but they are from the public. And because they get to go enjoy the artwork, it all qualifies as deductible and part of that 5% expenditure. So everything in relation to the entire estate is paid for, all done in a tax efficient manner.